We know that there's inflation out there. We've been talking about this for quarters on end. The problem today was that it's broadening out. Rents and services inflation is almost up 4% year over year. And of course, we know that services inflation is 60% of CPI and rent inflation is 30% of CPI. So inflation is here to stay, absolutely.
Well, as you can see, inflation is definitely talk of the town, and inflation is up, baby. Okay. The U.S. inflation jumped 7.5% in the past year, a 40-year high. So inflation is high, baby, okay? If you don't know what inflation is, let's get into it. I'll let you know, okay? Inflation is a sustained increase in the general price level of goods and services in the economy over a period of time. This is the process about which the value of money decreases over time. This happens when there's too much money in circulation. Okay, now I know you're asking yourself, how does inflation affect? How does it affect my stock market? The stock market, okay? Inflation is the rate at which the general price of goods and services in an economy increases, baby. Okay, inflation can be measured by looking at the country's consumer price index, the CPI. Consumer prices are measured by inflation because they reflect what people pay for things like food, clothing, transportation, education, and even medical care. The stock market is a system that allows companies to raise money from investors by issuing stocks and shares of ownership of their company. The value of these stocks will rise if the company does well and falls if it does poorly. So inflation has been on the rise for many years. It's been steadily increasing since 2008, when it was 0%. It was at 0% in 2008. In 2017, it reached 3%. This means the price has tripled since 2008. This affects the stock market because inflation makes stocks. Okay? All right. Now, what causes inflation? The decrease in supply chain. We got that thing out there, that COVID out there. Okay? An increase in the money supply, an increase in government spending. They spending a lot. A decrease in exports and increase in imports. We're getting a lot of transportation and infrastructure, going on, and an increase in wages. Oh, what's going on with the jobs right now? So all that combined is helping the inflation go up, baby. Okay. Now let's get to how do you want to protect yourself from inflation. First tip is invest in something tangible. Investing in something tangible like gold, silver, or property can help protect yourself from inflation. But it's important to be aware that these are not liquid investments. Which means that you won't be able to easily get that money back.
Look out!
So if you need the quick cash right now, that's something you might not want to do. You should also make sure that you are buying from reputable sources. There are so many companies out there who sell fake gold bars, coins, crypto, and everything else. So make sure you're protecting yourself out there. The second thing you can do to hedge yourself against inflation is buy stocks and crypto. Stocks and crypto provide a great way to protect yourself from inflation because there are more investments and more people getting into the game and more ways you can make money from dividends. You got safe stocks out there. You got the S&P 500. Those have been going up steadily. Okay, the top 500 companies. So that's one way you can help yourself edge against the inflation thing going on. But this is the Money Coach. I'm about it here, baby. The future of inflation. How it affects your investments depends on what they give us and how the economy comes back to life. Stay safe out there. Be blessed to invest in yourself. The Money Coach. I ain't worried about inflation, but I am worried. I ain't gonna worry. Milk costs too much. I got a lot of kids. They cost inflation, gas prices. Whew. You ain't got no job. You know what? Inflation. Okay.